Hi, I'm Jim Cramer here for a special edition of The Street Live. I'm talking all things Tesla. We've got the Tesla Daily host and Tesla investor, Rob Maurer. Rob, let's just get right to it. The earnings completely, well, let's just say they obliterated the estimates. But at the same time, I have to ask you, like I did on Squawk on the Street, is somehow the magic lost? Because this was a good quarter.
I mean, I've got the same question for you, Jim. I'm sitting here and I'm seeing the stock down 2.3%. And I'm wondering the same thing. Tesla beat revenue by 4%. They beat earnings by more than 50%, and the stock is down. So, I'm a little bit surprised, honestly, because I think Tesla did crush it. Maybe some of the comments on the earnings call weren't what investors were looking for. But, yeah, I'm definitely super happy with the results personally.
Look, I think that when I saw the numbers, they were terrific. On the call, I described the conference call as pedestrian, and that he described manufacturing processes, and he described the same thing that Ford and GM have been saying, which is supply chain issues, semiconductor problems. Is it possible, when he says that semiconductor shortages is quite serious, that it's actually maybe, for the first time I'm hearing, under promise? So maybe he can over-deliver if he gets those semiconductors.
I definitely think that's part of it. I also think Elon just wants people to appreciate the challenges that the industry and Tesla is dealing with right now. And in light of those challenges, just setting the results against those, they're even more impressive. I think probably to some extent that's what Elon's trying to get across. Obviously, he doesn't necessarily word it in those terms. He's not really about the short-term stock price, but I think that's what he's getting at, is just how difficult things have been and yet how successful Tesla has been in that sort of backdrop.
Rob, I'm sure there's some people who are saying, well, it may actually be down, searching for answers because of the impairment of $23 million for Bitcoin. But obviously, when you think about the giant volumes and the fantastic amount of money made, the Bitcoin really is just an asterisk.
Yeah, absolutely. It's nothing. I mean, Tesla's over $1 billion in GAAP profit. $23 million is not even a drop in the bucket. And it was actually less than the impairment was expected to be by most people. So, yeah, I think that's, not relevant at all. Bitcoin continues to increase too in price. So Tesla's actually, their position, they're making money on that if they do decide to sell. But yeah, for me, it's largely irrelevant.
Right. This morning, Carl Quintanilla and David Faber were talking about all the different companies that are coming public. Or Lucid just started trading. They converted that SPAC. Fisker's coming soon. GM has got some interesting things. We're in Action Alerts. The Mustang Mach-E 5, the Mach-E did win Car and Driver Car of the Year. There's a pickup that they've got, F-150, that's the Lightning. I didn't hear that Elon was ready with his pickup. Could it be competition? Do you think people are worried about competition?
They might be. I'm not. I think this has been the story for years. Competition is coming. But if you look at the numbers, electric vehicles are 2-3% of the market right now. Competition has to come. Tesla's not going to own 100% of the market. They're shooting for about 20% in 2030. So there's still 80% of the market that these other OEMs and new startups need to capture. And hopefully they can do that. I think it's been a slow start so far, but we seem to start getting some traction from other electric vehicle manufacturers.
Hey, Rob, there was kind of a cheeky reference, let's say a dig at Apple and Closed-Walled Garden Company. What did you make of him taking a shot at Apple? Could that be one day he's worried about Apple coming in, or not worried, he just likes the contest, or is he just having a little fun, as he's known to do?
I think more the latter. Elon's taken a couple of little jabs at Apple over the years. There's been a lot of talent swapping back and forth between the two companies. Obviously, they're rivals in terms of who's seen as this forward technology leader. So I think it's just kind of a little friendly jab. But I think Elon at the same time trying to prod them to change their business model a little bit too, more towards what Tesla aspires to do.
Hey, Rob, why wasn't there more to do about solar, given the fact that some people are saying that solar was a bad bet, and I think it's going to turn out to be a good bet?
Yeah, it's tough to say. Tesla didn't really talk too much about solar. Installations were down quarter over quarter, but up 3 times year over year. So it continues to be just, a business line to watch. It's pretty insignificant to Tesla's overall total right now. But obviously, there's tons of potential in that space in the future. So it's just going to be something we need to watch for in the coming quarters.
You know, Rob, why didn't he talk more about what could be an ultimate success in Berlin? He's talked before about, I mean, Berlin is right in the face of, obviously, about BMW and Mercedes. I'm very hopeful for Berlin. I put in Twitter that I was hoping that he would talk about how that he's going to take Europe by storm. But where was the bravado that I like so much from Elon Musk?
Yeah, I think the bravado was definitely missing on this call, and maybe that's why the stock is, a little bit down. I think Elon is just, he was really focused on expressing the challenges on this call, and I think that was the mindset that he came in with. I think there's so much to be happy with. In the shareholder letter, Tesla talked about how they've got the reliability and the lifetime validated for their new battery, which is going to be a huge unlock in terms of volume next year from Berlin, from Austin, and the financial results that we're seeing right now are before those even come online, and that's going to double, eventually triple production. So when you look at the financials and the result in that context, they're just, they're pretty nutty.
Right. Well, one last question, Rob. Is it possible when he talks about manufacturing, talks about semiconductor shortage, when he talks about the difficulty of putting out cars, what he's really saying is all of you doubters who think that Fisker is going to take me on, or Ford, or are worried about Rivian, or are worried about Lucid, do you know how hard it is to make these cars? Because to me, I felt more shaky about the competitors than I did about Elon Musk and Tesla at the end of the quarter.
Yeah, I think that's, what Elon is getting at is how extremely challenging this is. And, at the end of the day, Elon wants to see more electric vehicles on the road. He's not bothered by any competition. He wants them to succeed, actually, which is, unusual for a CEO to want. But he's expressing just how challenging this has been for Tesla. Everyone else still needs to go through that pain. They're not there yet. And, Tesla's been working at this for a couple decades, others for maybe a couple of years. So it's going to be a while for them to also work through the pain that Tesla's experienced.
Well, I think that's a great analysis, and we're going to leave it there. I want to thank you, Rob Maurer, for putting it in perspective, because I think a lot of people are thinking, what the heck? Why is it down? I think you nailed every single point. So, Rob,
Jim,
great
can
to
I
have you.
Can I give you one more point? It's going to be super quick.
Sure,
this is the secret.
What the hell?
This is the secret. I think everyone is missing this right now with Tesla. So they demonstrated this quarter how profitable the business is structurally with just Model 3 and Model Y. There was almost no volume from S and X. There was actually a loss on that business. When S and X comes in the fold, that's going to be another $2.5 billion in revenue a quarter. It's going to be another $750 million in gross profit, and the fixed costs are already there. So almost all that's going to drop down to operating income and the bottom line. When that happens, that's going to add about 50 cents earnings per share to Tesla's earnings per share, GAAP earnings per share. That's going to bring the forward PE basically to 100 at current levels. And as we just talked about, they're poised to triple with Berlin and Texas. So people are missing this. It's an opportunity, I think. So I just want to get that point across too.
I'm glad you did. I think that is an excellent point. I might bring some of that up tonight on Mad Money. Well, thank you so much for joining me, Rob. I'm off to the Daily Action Alerts Plus. Thank you. I'm doing my rundown with Jeff Marks. We've got some explaining to do on United Parcel. That's been a bad one for us. But I want to thank you for tuning in. It's great to talk to you, sir.
You too, Jim. Thanks.